Hi, everybody, and welcome to episode 4 of the Battery Intelligence podcast. Today, I'm excited to welcome Rishi from Mobius Risk Group. Welcome, Rishi.
Hey, Brad, great to be with you.
Rishi, we would love to learn a little bit more around the risk component to the battery life cycle. In the first few episodes, we've discussed a lot around the manufacturing side and how that can be improved from a software and data science perspective. But I thought it would be a good opportunity to understand how Mobius Risk has an impact on the batteries further down the chain. I know that you're very experienced in the risk side of things, so it'd be great to understand a bit more around your background.
Yeah, sounds great. So yeah, it's a very exciting world in batteries, and I actually started my career in equity research. I was working at mutual funds like Janus and AllianceBernstein out of college, and started in fundamental research. This was back in 2000. So the NASDAQ is falling apart, and I was put on covering old industries like beverages and integrated oils and so on. And then I decided I wanted to do something more quantitative. Got a master's degree in math, and then went into what was called quantamental investing at the time. So combining fundamental and quantitative research. And then really I got more interest in commodities and energy, and that's really been my passion. So relocated from New York City to Houston 12 years ago, and I've been in commodity risk management ever since. And for the first 8 years of that, I was focused. I was at a consulting company focusing mostly on hedge programs in the hydrocarbon area, hydrocarbons and refined products. And then really developed an interest in power, and then spent a few years at a company called Ascend Analytics, which is out of Boulder. And it's the premier company in storage valuation. How do you value battery assets, and what are bankable valuations? So I was really cut my teeth on battery valuation there, and then have come to Mobius Risk Group since then. And Mobius is a broad commodity advisor across various commodity groups, energy, metals, and ags, and so and in the battery space now we have very interesting work in offering around these batteries that have been financed and are now built, and let's say they're interconnecting and going to start operating in ERCOT. How are they going to make these bidding decisions day in, day out, hour in, hour out, or even sub-hourly? What are the risks that are involved in all the things that they're doing? What happens if they're how should they think about those risks, with various strategies? What kind of policy should they have in place? If they do things like over-the-counter hedging, which we can talk about, what are the counterparties in that space? What do they offer? How competitive are those offers? So there's a lot of obviously a lot of competencies that an operator needs to have to do these things successfully. And at Mobius, we try to add what we think we have, expertise and scale in. So that's what we're doing with batteries as well.
Yeah, really interesting. I'm very familiar with SN. I'm curious just to go a little bit back into your experience as well, Rishi. What was it that kind of drew you to batteries? Because I can't imagine there was tons of people that were exploring it when you did, I don't know, back before your Ascend days. What was it that stood out for you as though you thought, yeah, that's the way forward, that's for me?
Yeah, it's a great question. I mean, I think I'm energy, and specifically power, to me is the most fascinating commodity market. And then kind of within power, batteries are this lithium ion batteries. There's an explosion in development there, and they really have complex and massive amounts of optionality. In other words, if you have a let's say a thermal plant, you're essentially going to be while the economics are still very complex, you're mostly going to be producing power a large majority of the time, and earning the spread between gas prices and power prices effectively. Whereas with the battery, you're going to be, charging at particular times, could even be a 5 minute, interval, and discharging at other times. You're going to be managing your state of charge and your cycling. You're going to be participating in ancillary markets. And I think that problem is very, quantitatively very deep, and it's also very yeah, again, there's a lot of optionality. So I think there's a lot of risk management, kind of important risk management questions and how you go about it. And, obviously over time, batteries are assets that really should make money, right? Because they're able to charge at low prices, discharge at high prices, offer ancillary services. But, things can happen where, if you have obligations and you run out of charge, you could be upside down, right? And so not only that, just sort of maximizing what you can do with the asset, with the physical constraints you have, and how much how hard do you want to cycle the battery? That's a big problem that can lead to very different outcomes. And so I think just thinking about that problem, working about that on that problem is really interesting for me.
Okay. And so building on that, your current role at Mobius, I understand that you lead a lot of the engagements with ERCOT and the BESS operators. Could you just maybe expand a little bit on that and how you're impacting or influencing things like the trade policy?
Yeah, great question. So yeah, essentially there's some operators that I work with where they are, it's really exciting time, because essentially they are on the cusp of being energized and trading in ERCOT. And so, they're completing the development phase and construction phase and moving on, into the operations phase. And, some developers, don't have any intention of operating the battery. They're going to flip the project before that happens. But there's some, particularly, larger shops, but, smaller, medium shops as well that now are going to operate the battery. And it's obviously a different set of competencies and requirements than development, right? Which is extremely complex in itself. But once you come to operate, you don't want day one that you're putting your traders and risk policy and strategy in place, right? You want to have that sort of ready so that, once you're energized, then what to do there. And so there's a significant learning curve there. And again, this is all new stuff. So it's not like lithium ion battery valuations have been around a whole long time, particularly in the changing market conditions that we have. And so one thing is really just I think with the traders that are going to be in place, understanding what's in their pro forma assumptions, what's in their back tests, what risks are there, and what how should policy be informed as a result of what's there. Because one thing is with batteries, there's a lot of variability in terms of revenue performance, right? So you can have a month like last August in ERCOT where there was a lot of tightness, and largely due to the introduction of an ancillary product, ECRS. But we had really huge revenue opportunities for batteries in both the energy and ancillary markets. And then you can have a month like last July where, average ancillary prices, let's say for a service like RRS and ERCOT, average, $3 or less, right? So, way down from the prior year, right? And it is something that I think, for companies to set risk policy, they have to have an understanding of, how do we benchmark first, right? How do we benchmark, and how do we know if relative to that benchmark we are performing as we expect? And so a lot of the work initially stems from really creating understanding around, these are the pro forma expectations. that you have for the project. Here's how much variability you should expect around those expectations. And then here are the areas where you're looking for your your schedulers and traders to add value. And this is how much, from that you can set limits around things like how many ancillary hours should we be committing to a day, right? How much should we be willing to cycle potentially in a day, and all the way to really advance things like things like conversions trading. So there's in ERCOT, you can essentially bid on this spread between where day ahead and real time prices settle at a particular node, and that is something that can add a lot of value. Can also create losses, but a battery is a great natural hedge, a physical hedge against that kind of trade. And so really understanding what is a convergence or dart trading strategy that is bringing good risk adjusted rewards to the table versus what is just bringing sort of noise and a high amount of noise relative to signal. I think these are all the things that we help clients with, and we haven't even yet gotten into sort of what Mobius's bread and butter is really over the counter markets, OTC markets, forward markets, and other developed asset classes, and other, for instance, obviously oil producers, but other electricity producers, they will hedge, right, when there's available instruments that make sense. And same thing for battery operators, right? You could there are certain products you could lock in ahead of time and sell forward in a forward market. And of course, to do that, you need counterparties in place, agreements in place. You need infrastructure to be able to do those trades, but it can be very beneficial, particularly in a market like ERCOT, which has a lot of volatility. So just just a few weeks ago, we were seeing certain day ahead benchmarks for August trading $200,
Wow.
and now they're trading 50, right? And so and this happens in ancillary markets, energy markets, but you'd have the ability to also add value with risk management activities in that forward market versus just saying every day I'm just gonna see what I can do in the auctions and make money that way.
Yeah. I love love what you said about BESS being a good natural hedge against spread. That makes perfect sense. And then just earlier, you mentioned about the learning curve being significant for a lot of these developers. Is there like a point at which you will usually get involved with projects and companies, or it does it depend on the size of the business? Or I'm just curious at what point Mobius would become engaged potentially.
Right. So at Ascend, there's a lot more work around and assistance around development the development work. So where should you site a battery? Where should you what kind of configuration should you go with? What is and ultimately what's a valuation that Ascend can support that's bankable, that can lead to project financing? Those are all questions that Ascend works on, and at Mobius, I'm not working on those questions. I'm working more on the questions of, okay, once a battery is constructed or it's nearing completion, then what is going to be how are we going to assess the trading performance, right? The performance of the battery, and to the extent there's the physical bidding decisions of the battery, as well as any discretionary financial trading decisions around the battery. And so where we tend to get involved is really at that point when risk management and trading policy is needed, and a serious evaluation of let's say the pro forma and back tests and go forward projection is needed. And so that tends to be, call it 6 months before the battery anticipates being energized, to give you a rough time frame. But we also do other things at Mobius in power outside of batteries as well. And so really most of the time, there are a lot of funds that are considering investing in certain assets, and they ask us to do work around that. So it can vary when it comes to all the assets in power, but I'd say for batteries, it tends to be about 6 months before they're energized is when we get involved.
Yeah, and you mentioned Mobius does other things outside of batteries. How big a part of Mobius is the battery side, and how would you break it down into the other areas?
Yeah, so I would say batteries is really a small part of the total Mobius, right? So Mobius, we have a large upstream business in oil and gas. We have a large downstream business. So we are purchasing gas and fuels for a lot of huge industrial players. And then we have metals team, we do agricultural work. So I mean, batteries is a new exciting space. We're doing very interesting work, but it is, I would say, yeah, it would be a very small part of Mobius in total currently. I think inevitably, and we're seeing this, a lot of these worlds in energy, there tends to be there's some convergence, right? So we have, for instance, a lot of clients trying to mitigate the increases in their power bills, right? And and they can be industrial clients or oil and gas clients or other downstream consumers. And so there's work we're doing there. Some of them want to maybe do behind the meter projects. So a lot of these worlds are sort of converging, but I would say traditionally, Mobius is batteries is a new thing for us, in the last year or so.
Yeah. And a bit more of a personal question from my side. Where would you see the biggest opportunity from a trading perspective? Would you say it's when I'm talking more about, or mainly about batteries? Would you say it's on the physical side or the non-physical side? Like, just out of interest, where are you seeing the biggest sort of gap in the market right now?
Right. Yeah, great question. So I think on, an ERCOT, these markets are all different in terms of, the power price patterns and formation and so on. But in ERCOT, there really is for, lithium ion batteries, it's the best merchant market in that you can, on the physical side, there are a lot of particularly in advantaged locations, but a lot of revenues that can be earned in energy arbitrage, and then that's growing, right? As we have more renewables coming on the system, you have, more ramps due to, let's say, the sun going up and down or the wind blowing or not blowing. And you have ancillary markets that are ancillaries are where batteries have traditionally made their money. And that's because they can provide these services, services that are related to essentially stabilizing the frequency of the grid. They can provide those at much lower marginal cost than a thermal plant. And so, that's where batteries have made a lot of money historically, and, with pretty simple strategies, just offering ancillary services. But that's starting to get that's changing completely because you have so many batteries being built. Like this year, we're going to end, this year with 10 gigawatts or so of batteries in ERCOT, and that's essentially the size of all the ancillary markets if you add them up, right?
Yeah.
There's still periods where ancillary prices can go very high, like we saw last year. But there's also, just like I mentioned last month, I mean, July, we have, a lot of these prices settling in the low single digit, uh, dollars per megawatt hour. So, that game is generally, uh, it's saturating. And so the way batteries are going to make money is it's going to continue to be on the physical side with, but more related to energy arbitrage than ancillaries. Um, but really the players that earn the greatest returns, there is a significant opportunity in, again, if you're a sophisticated shop in doing convergence bidding and marrying that with your physical strategy. So, long story short is I think, primarily the physical asset will earn the base returns, but to really maximize the asset, it's going to be physical and financial uh, working together. And, that's actually the Mobius logo is the Mobius strip, and, one side is physical, one side is financial. So that's kind of our belief system. But I think it's very much true for batteries that will be the case.
Yeah, very interesting. I'd love to just understand a bit more on ETRMs and how they differ to CTRMs. Might
Yeah,
sound like a bit of a silly question, but are you able to just explain that for us?
I don't know if it's silly because I kind of have the same question. I mean, I've worked in the space for 12 years, but I mean, I think ETRM is energy trading risk management. CTRM is commodity trading risk management. I think energy is a subset of commodities. So the best answer I would have is that, ETRM is a subset of CTRM, but a lot of times people use them. I mean, most of the time people use them kind of interchangeably,
Yeah.
But we have an in-house built CTRM system called RiskNet, and uh, we are always adding to it. But the idea is that if you are um, you know, an oil and gas client, if you're a downstream consumer, if you're in power, if you're in metals, you all have various deals that need to be captured, and RiskNet is a system to capture, all those deals for our clients and report on them and give visibility to essentially what's in the book. And so, yeah, you're, a lot of, you know, as I just because something is labeled an ETRM or CTRM doesn't mean that it handles necessarily everything that across all commodities or across all contracts. And so I think, yeah, we're essentially trying to lead in terms of, in terms of strategy, policy, systems, and execution across that whole suite. What do clients need to have to be successful, right? And a lot of times things start, on a small scale before they're scaled up and codified and so on. And so, we have the systems to, let's say, that can be leveraged for, for let's say battery operators. Let's say they're trying to embark on a hedge program and engage in, various OTC instruments. Those could be things like selling ancillaries forward. There's also other contracts out there that are called like TB contracts, like top bottom 2 hours or top bottom 4 hours. And then there's a bunch of what you'd call sort of complex structured products, real-time call options, and so on. And so, I don't think there's an out of the box sort of solution at scale that captures anything that somebody might, contract that some counterparty might offer, right? But what we do is, obviously, you know, uh, uh, build in that functionality for any contracts our clients end up engaging with. And so that's kind of where we are in the battery space. It's very early days, and it's not like, this OTC market is anywhere. I mean, it's really, just starting to crawl versus some of these other, deep markets that we have in oil and gas and metals and so on. But nevertheless, I think it's going to absolutely grow because you just look at the growth of operating battery capacity, and it's more than doubling this year in ERCOT. So I think these offerings and this kind of scale will follow. But where it is right now, we're still in very early days.
Yeah, yeah, and that kind of leads us nicely on to the Mobius advantage. I guess what we've been speaking about during the conversation on the BESS operators versus like building an in-house risk team. How would you like summarize the Mobius advantage?
Yeah, so I would say, across all of our, essentially across all our client base, what we're aiming to do is be a non-conflicted advisor that adds value, right? And, you put it one way that, if you could either build your risk team in-house or go to Mobius, right? So that sometimes that's true, is an either or kind of thing, but other times it still makes sense. You have an in-house team with some functionality, but you still want outside expertise, systems, data, all of that, because you may not be doing everything in-house, right? And so, a good example of that would be, something like, let's say, a CTRM system, right? Or, and so where, even we're doing work for larger operators that have their own desks and are growing those desks, and maybe eventually they'll they plan to really do most of their activities in-house, right? But currently where they are, they need to get to that point, right? And there's sort of not a whole lot of people out there that have all the, let's say the expertise and systems we have in OTC markets, plus, let's say my experience with battery valuation, right? And risk policy. And so there's kind of a significant offering, even for those groups that eventually want to do as much as they can in-house. Then, of course, there's other groups that, really don't intend on, ever, let's say, having certain functions in-house. They will always want to rely on someone like Mobius to aid with executing hedges, so we're a natural fit there too. So we try to just sort of see what our client really needs. And I think we have a variety of ways to work with them. And yeah, the Mobius advantage at the end of the day is, we have a lot of commodity expertise. We have, people that have been, involved with OTC markets for, I mean, for myself over a decade. I mean, there's several people here. It's multiples of that. But, it's, again, if you're a battery developer, or if you're an oil and gas producer, or you're an industrial customer, your core competency isn't OTC markets, right? Your core competency, at least for the firm, is developing and operating batteries, or drilling wells, or producing steel. But these are really key commercial functions that have a big impact on your outcome. And that's where the advantage is that I think that we can add a lot of value there, in a way that, at a far lower cost than if you were to try to build that entire function yourself.
Right. Yeah, makes total sense. And what would you say, looking forward, Q3 and Q4 and 2025 and beyond, what are the biggest challenges from your perspective?
Yeah, it's a great question. I think the biggest challenge for, let's say, specifically talking about battery operators, is that, again, we're a lot of batteries are coming online, and and they have been financed, and they have, there's certain expectations around what they will earn, right? And I think the understanding around how much, what that ends up being and how much variability there is in that, I think there's a lot, we're just in early days of that. So in other words, when you look at a, 20-year valuation on a piece of paper, I mean, it's just a valuation, right?
Mm-hmm.
And unlike another asset class where, I mean, all forecasts are hard, but I think predicting battery revenues is probably especially hard because what's happening is as ancillary markets saturate, a lot of it's really a lot of returns are coming in months where the grid faces extreme conditions, and
Mm-hmm.
it's hard to know, the frequency of that. It depends on a lot of things, but when those events happen, very, very significant revenues are generated. And so I think for operators to kind of understand what that, have experience with what that variability looks like, and how also to manage that optionality, So in other words, should we be selling, if the forward market gives us a chance, should we be capturing,
Mm-hmm.
selling, certain products at high prices, should we be engaging with, dart trading, because dart trading is something that kind of smooths it. It takes away from those revenues from those extreme periods, but adds them to periods where revenues wouldn't be as great, right? And so I think figuring all that out, we're just starting on that, and that's going to be the challenge for operators. I think sometimes you have a summer like last summer where batteries made a lot of money, and you have this narrative that, okay, load is just off to the races. We're adding all this, data center demand and so on and so forth. And, while that is happening, you could easily have, a, a summer that's not very volatile, where ERCOT batteries don't make much money, right? And, I think just understanding the nature of that, the call option that they really own, and monetizing that, I think is going to be key to success.
Fantastic. And what I guess just as like a final thought around Mobius risks, Mobius services and solutions. What how do you see the roadmap looking for the business?
Yeah, great question. So I think for the whole of Mobius, I mean, I can say I'm mostly involved in hydrocarbons and power. And I think in the they're kind of very in very different parts of the business cycle. When I started as a hedge advisor in 2012, um, I was working with there was a booming shale, the shale revolution was sort of, hitting its full stride. And so there was a lot of new companies being formed in the oil and gas space, and they needed hedge policy and counterparties and all that sort of stuff, right? And, there's still some new companies being formed, but there's a lot of consolidation, and there's a lot of, larger companies that are now really trying to, it's more about, managing to certain cash flow targets, and also about really having, let's say, software solutions at scale that can help them with their midstream marketing challenges, or, things like that. Batteries are kind of, they're obviously a different animal, but we're kind of, it reminds me of being in shale in 2012, where you've got all these new players, and they need, they need to get those to get going, and they need to get, you know, policy infrastructure in place, and, trading infrastructure in place. And so, I think Mobius, our goal is to really be best in class and work across, all the major commodity groups, over the long term. But I think, in terms of, we have different strategies based on the different verticals we're in, about kind of what we're pursuing. And, for me, it's exciting to do work in both. I mean, I think batteries are kind of you could say, the more sort of, ground level orient kind of work, and oil and gas, a lot of those clients, it's more a more mature business where we're kind of adding efficiencies and scale. So I think ultimately we will let the market kind of you know we can work along those different parts of the cycle. So yeah, I think the future of the business is very much going to be again a combination of systems and data and models and commercial expertise, serving clients, and then exactly the service that we're providing it really depends on where they are in the life cycle of operating.
Yeah, yeah. It's been so exciting, Richie, learning about yourself and the services and solutions that Mobius provide. I'll be perfectly honest, I didn't know how in depth that was. And it's exciting to hear how much of an influence that you can have on the BESS industry and the wider energy industry as a whole. So thank you very much for taking the time. I think everybody that's listening would have found it super interesting, and this will be going live in the next couple of weeks. There'll be a post and it will be on the various different channels that we use, so Apple and Spotify. And if anybody's got any questions, I'm sure Richie would be delighted to answer or to follow up. So feel free to reach out to him directly or myself, and stay tuned for episode 5 that will be coming out in September. Thanks very much, Richie.
Thanks,
Bye.
Ryan. All right.
Bye.
Bye.